Welcome to the deep dive. Today, we're digging into something I know a lot of you are watching, Amazon stock.
Yeah. What's the play right now? We're looking at a recent piece from the Motley Fool.
Exactly. They're asking if it's maybe a good time to buy, especially with Q1 earnings coming up, what, April 29th?
That's right. And, if you're trying to get smart on this stuff quickly, without just drowning in market noise, this is kind of for you.
We've done the legwork, basically, sifted through the analysis to pull out the key stuff.
The core insights, yeah.
Yeah.
What you actually need to understand from their perspective.
And you can't really talk about this without mentioning the whole economic climate, can you? It feels a bit dicey.
Definitely uncertain. You've got President Trump's tariffs looming, right?
Yeah.
That whole discussion.
And how that might squeeze companies, the whole economy even. It's a big question mark.
It really is. And that's the exact context for this Motley Fool analysis we're diving into.
Okay.
They look hard at how those tariffs, especially the big numbers talked about for China, could affect Amazon's e-commerce side.
Right.
And then they pivot to AWS, Amazon Web Services. Huge part of the business, especially with all the AI stuff happening.
Got it. So our mission here is basically to unpack that analysis, lay out the opportunities and the risks they see for Amazon right now.
Precisely. Let's get into it.
Okay, so tariffs first. The Motley Fool flags this potential 145% tariff on Chinese imports. That sounds significant.
It really does. And you think about Amazon's marketplace. I mean, it's just full of third-party sellers.
Yeah, tons of them.
And a lot of them are based in China. So yeah, that's the core word.
It just sounds like a potential shockwave,
It does. The analysis even says some Chinese sellers are apparently thinking about stopping sales to the U.S. through Amazon if this happens.
Wow. Okay, so that immediately makes you think about Amazon's growth for, the rest of 2025.
Big red flag, yeah. But here's the nuance the Motley Fool brings up.
Okay.
Amazon doesn't actually own most of the stuff sold on its site.
Right. They're the platform, the digital landlord, kind of.
Exactly. So if Chinese sellers pull back, well, what happens then?
Does someone else step in?
That's what the analysis suggests. Maybe sellers from, say, Vietnam or Mexico could fill the gap, offering similar products.
So for me as a shopper, maybe the selection doesn't totally crater?
Potentially, not drastically, no. But then there's the price question.
Yeah, those tariffs don't just vanish, right? Someone's paying.
Exactly. The article points out that even if goods come from other countries, Trump's also putting tariffs on imports from those places, too.
So prices could still climb for us.
Very possible. And stepping back, these kinds of broad tariffs, they could really mess with global supply chains.
How so? What does that actually look like?
Well, think about getting a product from a factory somewhere overseas all the way to your house. Tariffs are like roadblocks or expensive detours.
Okay.
It can mean delays, extra costs at different points, just makes the whole system less efficient. Major disruptions are possible.
So potential delays, maybe higher prices. Doesn't sound great. But the analysis also sees a potential positive for Amazon in this.
Yeah, that's a key point they make. Even if the sellers change or prices tick up a bit, why do people use Amazon?
Convenience, prime shipping, selection.
Right. The core reasons probably stay the same. U.S. shoppers will likely still want the ease of online buying, the prime benefits.
And businesses will still need to advertise on Amazon to reach people.
Exactly. So Amazon's fundamental role as the central marketplace might hold up pretty well, even if the players change a bit.
Okay. And the piece also mentions the R word, recession. If tariffs stick around, could we see one in 2025? And how's Amazon set up for that?
Yeah, they raise that possibility. But this is where Amazon's strong balance sheet comes in.
Meaning they have cash, not too much debt.
Basically, yeah. The Motley Fool highlights this. It gives them financial strength, a cushion, to handle tougher economic weather.
So they can ride it out better than maybe some others.
That's the idea. Plus, don't forget the bigger picture trend. E-commerce keeps taking a larger slice of all retail sales in the U.S.
Right, that long-term shift online.
That's a tailwind for Amazon, regardless of, short-term bumps.
Okay, interesting. So that's the e-commerce side with the tariff complexities. Let's switch gears to AWS, Amazon Web Services.
The greatest profit driver, as the Motley Fool puts it.
That's a strong claim. Do the numbers back it up?
Oh, absolutely. In 2024, over $100 billion in revenue from AWS.
Wow.
And nearly $40 billion in operating income. So, yeah, really high profit margins compared to the retail side. It's a powerhouse.
And right now, the big growth story there is AI, isn't it?
It really is. All these AI startups like OpenAI, Anthropic, They have massive computing needs.
Training those big models takes a ton of power.
Immense power. And that's driving huge demand for cloud services, which AWS provides.
So AWS is benefiting directly from this AI boom.
Hugely. The article notes AWS revenue grew, 19% year over year in Q4?
Pretty healthy.
And they think that growth could even pick up speed in 2025 because of this ongoing AI demand.
Just to clarify, when we say AI demand, what exactly are these companies buying from AWS? Like computing time, storage?
Yeah, it's things like high-performance computing instances, basically. Renting powerful servers for training the AI models and then running them, what's called inference, plus data storage, specialized machine learning platforms, a whole suite of services.
Okay. But is it all smooth sailing? Any potential risks with this AI-fueled growth that the analysis points out?
Yeah, there's a potential hiccup they mentioned, overinvestment.
Yeah, meaning?
Well, everyone's rushing to build AI capabilities, right?
Yeah.
Spending huge amounts now, betting on future demand. There's a risk that maybe the supply of cloud capacity catches up or even gets ahead of actual demand in the near term.
Like building too many houses before people are ready to buy them?
Kind of, yeah. And the article cites something specific here. Reports that Amazon and Microsoft might be slightly tapping the brakes on some future data center spending.
Ah, okay. So that could suggest maybe the initial gold rush is settling down a bit.
It could signal a bit of moderation, yeah.
Yeah.
Supply catching up with demand, perhaps.
But what's the long view on AWS, according to the Motley Fool?
Still very positive. They stress it remains a high-quality business. They expect revenue and those nice profit margins to keep growing over the long haul.
Right. So, putting it all together, we've got potential short-term headwinds for e-commerce from tariffs.
Mm-hmm.
But this massive long-term engine in AWS, maybe with some near-term AI spending adjustments.
Right.
So what's the bottom line from the Motley Fool? Is now a good time to actually buy Amazon stock?
Well, they definitely acknowledge the increased uncertainty right now. Short-term picture is cloudier.
They even suggest 2025 could be a down year. What does that mean exactly? Slower growth.
Likely, yeah. Slower revenue growth, maybe profitability takes a hit compared to recent years, mainly because of those tariff worries.
Okay.
But, and this is key, their main focus is really on the long term.
Looking past the next year or two?
Exactly. And when you do that, you see Amazon's track record. They point out, $100 billion revenue in 2014.
Because $638 billion last year? That's incredible growth.
It's staggering. And the analysis suggests they expect that kind of trajectory, maybe not that steep, but strong continued growth for the next decade and more based on e-commerce and the cloud.
Which brings us to the stock price itself. It's down about 18% this year so far.
Uh-huh. And the Motley Fool basically frames that pullback as a potential window.
An opportunity.
For long-term investors, specifically.
Yes, very much for the long-term perspective. They say, look, nobody knows how the stock will react immediately after the Q1 earnings.
Always unpredictable.
Right. But the current valuation, they mention a forward PE ratio.
Price for earnings?
Yeah, around 27. They say that looks pretty cheap for a buy and hold investor.
Cheap relative to its future earnings potential, they mean.
That's the implication, yeah, for a company with its growth prospects.
So the core recommendation boils down to take the long view and maybe consider adding this tech giant to your portfolio now. That's pretty much it. See the current dip as a potential entry point into what they consider a high-quality, long-term growth story.
Okay, let's quickly summarize then. The Motley Fool's take highlights these potential tariff headaches for Amazon's e-commerce side in the near term.
Right, short-term bumps.
But they see huge long-term potential still in both e-commerce and especially AWS, which is booming partly thanks to AI.
Significant long-term growth drivers there.
And given the stock's recent dip, they suggest it could be an attractive entry point for investors thinking years down the road.
That's the essence of their argument, yeah.
Good stuff. Now, obviously, it's important for everyone listening to remember this is based on Motley Fool's analysis as of April 24th, 2025.
Absolutely. Things change fast. Market conditions, news, it all evolves.
So that leads us to our final thought for you, the listener. When you're looking at a company like Amazon with this mix of possible near-term trouble and those really compelling long-term growth stories, what do you weigh most heavily? What factors matter most to your investment approach in this kind of fast-moving global market?
Something to mull over, for
Yeah.
sure. It really depends on your own goals and how much uncertainty you're comfortable with.
Definitely. Well, thanks for tuning into this deep dive.